what is the? I mean, this political story is a huge business story because, of course, this goes back to the macro environment. What are you seeing in terms of an impact on the market today, though?
Generally, uncertainty is bad news for the share market, but in terms of the Australian impact on our markets, we haven't seen a huge impact at all. In fact, the range on our market has been quite small, and we've only been moving within a 10 to 15 point range. But where there has been a dramatic reaction has been in the Aussie dollar. And if we have a look at the Aussie dollar this morning, this is what it looks like. As Kevin Rudd was speaking from Washington, we did see the Aussie dollar moving downwards just slightly, but it was when Gillard did announce the leadership ballot on Monday at 10 a.m. that we did see a sharp reaction in the Aussie dollar. Since the Aussie dollar has been once again climbing, pretty much ignoring the leadership potential battle that will be on Monday. So altogether, really shrugging that off, and instead the market focusing in on company news, and we know that it's earnings season. So one of the areas which is doing quite well today is the energy sector. We're seeing Origin Energy up around about 2% after its result, and really helping that energy sector higher. But elsewhere around the market, we are seeing losses across most of the sectors. Losses in the material space, the industrial space, the financial space, the property space, the telecom space, as well as the utility space. The Australian market down by 0.2%. And technically today still remains an important day. For the third consecutive day, we're testing that 200-day moving average, which stands at 4,290 points. And if we have a look at the intraday graph of the Australian share market, this is what it looks like. We've been through that 200-day moving average 3 times in the first hour of trade, but once again it does look like a foul there, and you can see that just in the last 20 minutes we've seen the Australian market take another leg down lower, and we're actually at the low of the trading day at the moment. What's going to be interesting is whether the leadership ballot does have an impact on volumes on the market. We have seen pretty anemic volumes on the market as investors stay on the sidelines over the last 6 months. And
I mean, they're telling us.
Julia, apologies. We just had a cross line there. I missed the end of what you said, and you just come back to me. I'm glad you're back, though. I will ask you about some of the other results that we've got on today. Let's go with David Jones. The numbers from the second quarter. Now, why are these so important right now?
The second quarter numbers are extremely important because it encompasses that all-important Christmas trading period, which makes up about 30% of full-year earnings. And if we have a look at the guidance which has been given for the second quarter before the result, David Jones was expecting to see the sales numbers still negative, but an improvement on the first quarter. Now, that's not surprising because the first quarter numbers, while they were quite bad, were impacted because of refurbishments going on in Chadstone as well as in the Warringah centres. So if we have a look at the second quarter, well, we've seen Chadstone as well as Warringah coming back online. Chadstone was completed at the end of September, whereas Warringah was completed at the end of October. So while the first quarter numbers were quite big, we saw like-for-like sales down by 11.2%. We have seen a bit of a rebound in the second quarter, still negative, but only down by 2.4%. And it does look like the market is having a positive reaction to that. Also, we've seen the first half guidance of a negative growth of between 15 to 20% being reiterated, so no change to that guidance. And David Jones shares, of course, now one of the most shorted shares on the market. The shares moving up around about 2% today.
Julia, the 10 numbers that we've seen and the share price reaction have just showed that advertising market is still very tough. Fairfax today, what did it say about the state of the advertising market and when things might pick up?
Well, talking about one of the most shorted shares on the market, and Fairfax is also one of these, and it would have been interesting to see a result which sort of changed perceptions on the market, but it does look like the commentary that's been coming out of Fairfax, the result, really making no change to shareholders and investors' position. So usually when you do see a share that is shorted as much as Fairfax, around about 12% of its shares is short sold, then if there is a change in terms of the commentary or any signs of a turnaround, then we see a closing out in some of those short positions, and you can frequently see a violent move in stocks like this. But today we aren't seeing any sort of violent move, so no surprises here. We have seen revenue down by 5%, and if we break it down, it's interesting to see the revenue moves in each of the divisions. If we have a look at publishing revenue, down by around about almost 5%, but if we have a look at the digital revenue, then that's up by 14%. 15%. So an extremely strong result there, and it really shows you where the future of media is, away from the old media into the new media. But the advertising markets still remain quite soft, especially in New South Wales and Victoria, where things are still challenging. Really no change, no improvement in New Zealand either. So Fairfax shares, they've been in positive as well as negative territory, but not a huge reaction in the shares today. So probably no change in a lot of investors and traders' positions.